Let's bring in ABC News financial correspondent Alexis Christoforous. Alexis, this is big news, right? How significant? How big is it? And how's it going to help fight inflation?
Tackle inflation, which we know is rising at the fastest clip in more than 40 years. Fed Chief Jay Powell also saying today he believes the economy is strong enough to withstand interest rate hikes, more interest rate hikes in the future. And he's already promising we're probably going to see another half-point increase at their June meeting and then again at their summer meeting as they continue to get ahead of inflation. You know, the Fed, a lot of people are saying was late to the party here, that they were behind the curve, that they should have started raising interest rates a lot sooner. So now it appears as though they're trying to play catch up.
And so you mentioned he's talking about these rate hikes going forward. So would that be the end of it? I mean, how high do they go?
That is the big question, but I can tell you the goal here in raising these interest rates is to slow this red-hot demand. We're all out there spending on goods and services despite high inflation. The Fed wants to try to pull back that demand, slow the economy just enough to start to bring inflation back in line. Of course, there is a balancing act there. They don't want to slow the economy so much that we slip into a recession. But here's the impact this is all going to have on all of us pretty immediately. So the rise in interest rates means you're going to be paying more for things like auto loans, credit cards, home equity loans, even some small business loans. Those rates are going to be moving higher. Also, if you have your money in a CD or in a savings account, the interest you're going to make on that money going to be a little bit higher. And then, of course, mortgage rates, right? We all want to know, where are mortgage rates headed? Well, they've been moving higher in anticipation of these string of interest rate hikes from the Fed. The 30-year fixed mortgage right now averaging more than 5% in this country. A year ago at this time, it was less than 3%.
And now some economists are warning that the Fed could go too far and actually take us into recession. What do you think?
Exactly. And in fact, this past week, we had two Wall Street firms, Goldman Sachs and Deutsche Bank, coming out and saying they are upping their forecast for a possible recession. They believe it's going to be mild, but they see that that could happen at some point in 2023 or early 24. And if you look back at history, when the Fed has gotten this aggressive with interest rate hikes, it has ended with recession. It really becomes, you know, the lesser of two evils. Do you want runaway inflation, or do you want to risk a mild recession that the economy could hopefully quickly bounce back from?
Well, how's the market responding?
You know, it is rallying right now, and you might be surprised to see that. There you go. A live shot of the big board shows the Dow Industrials up nearly 800 points right now. And the thinking here is the Federal Reserve basically poured cold water on the idea that interest rates will rise by 0.75%. So, you know what? The market's saying, OK, 0.5%, we'll take it. We didn't want the 0.75%. And that's why we're rallying right now.
All right. Well, with the rally, the president also spoke about the economy and the importance of lowering the deficit. Let's take a listen to what he said today.
Why is it important? Because bringing down the deficit is one way to ease inflationary pressures in an economy where a consequence of a war and gas prices and oil and food and it all, it's a different world right this moment because of Ukraine and Russia. We reduce federal borrowing, and we help combat inflation.
So, Alexis, what do you make of what the president said? We heard a lot about the deficit under lots of presidents. Not a lot about it recently, though. It hasn't been as much of a concern.
It hasn't been. I don't think the average person's walking around talking about our national debt or our deficits. But look, President Biden's looking for wins on the economy anywhere he can get them. He wanted to highlight the fact that they're going to be paying down the debt for the first time since 2016. It's always good news when you can pay your bills, especially when the country can. That helps our overall currency. The dollar looks better around the world as well. It will long term, Biden's right, lower inflation. But right now, that quick fix that perhaps Biden and the Democratic Party is looking for as they move closer to these midterm elections, this is not going to put money immediately into your pocket, my pocket, anybody's pocket.
All right, Alexis, thank you so much.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.